Okay guys, welcome to today's video. So we're going to be talking about something very important, right? So I need you guys to pay attention, right? So we're going to be talking about structural confirmations, and I think I'm just going to do this in right two parts, right? This one is going to be for the higher time frame, and we're going to also consider lower time frames confirmation, right? But there's something very important I want to tell you guys, right? um if you always wait for structure before you enter, always wait for structure before you enter. And it's something with traders, right? Most times we are overwhelmed with the trading, and we make those mistakes whereby we don't wait for structural confirmations before getting into a trade, especially on high time frame, because high time frame structural confirmations usually take long time before you see it. But in order, right, based on the experience, right, in order for you to be in a very good safe trade instead of trading noise, right, because you get to see lower time frame fractal movements and all that, that may just be noise, right? You're trading longs, you're trading shorts, you're trading longs, you're trading shorts, and you get to be stopped out most often, right? But and when such moves happen, if you go to higher time frame, there's no basic structure on that particular range you are trading, right? There's no basic structure. Market has not actually created that structure shift, and you get confused. Now we know basic structural shifts. Now I've discussed videos in our previous videos. Say you're in an uptrend, right? For markets to shift to a downtrend, right? Market can take out liquidity, right? This means take out the previous high instead of respecting the internal range liquidity to buy here and continue. Market would now take this out, right? This is one way market can shift from an uptrend to a downtrend, and another way you can have market being an uptrend like this, right? Market taps instead of market going up, right, without even taking this liquidity, it respects this high and makes a shift like this, right? You can see moves like this, so either like this or like this one, the market swept liquidity and creates a structural shift. This one, market creates a high, a low, a high, a low. Instead of creating another high, it could not, it stopped and went back to disregard the previous low, right? Okay, now if we see moves like this on higher time frames, remember, we are moves, right? In SMC, we target structure, we target liquidity. Now for example, you notice market on higher time frame, say market was bullish on higher time frame, say the daily time frame, right? Then all of a sudden market makes a low like this on the daily, right? Market makes a low on the daily time frame. You saw swing high, swing low, swing high, swing low, and now there's a swing high, and market has created a swing low. Now you'll be looking, the first thing you want to do, since market is retracing into lower regions, right, what you'll be looking for is buys, right? Because this previous low has not been taken out, market has clearly break, right, with a body close above this low, right? So what you'll be basically looking for is for market to at least retrace into discount regions on this range where you can take potential buy continuations from, right, on the daily time frame, where you can take potential buy continuation from anytime market gets to a range on the discount region, right? Maybe there is an imbalance here that market wants to actually what buy from. Now if market now decides to do, instead of buying here, right, now you cannot know if market, that's the thing, you would not know if market will definitely want to buy from this place compulsory, right, till market actually gets to this region and makes a reaction. Now if market gets to this region and there is no reaction that market wants to reverse, all you will see is market creating that sweep shift here, right? Now you would, on this region, now you will see a confirmed shift in this structure. This is on higher time frame, right? Now you would be seeing this shift, then all of a sudden market started buying from here aggressively. Now most times traders will get confused that, oh, at this point market wants to maybe continue buying, but most of the times you would see this structure on daily time frame and ignore it, that there's already been a shift on this structure and market is just retracing. But what most of us will do is, because there is a beautiful uptrend here and this is, and you've been catching really buys, you'll be targeting markets to reach this side, and there is clearly a supply zone here that markets wants to actually, right, sell from. Then maybe market sells and creates a move like this, comes back up, we'll still be targeting buys, right? Then all of a sudden you see that market will just keep taking us out for the buys till market comes down to complete the second break of structure here. This is the market structure shift, this is the first break of structure, right? Now maybe tapping into high level demand region, and we'd want to now shift structure to the upside, right? But because we majorly did not wait for structural confirmations, right, we did not see the structural confirmation on the higher time frame, would be trading a lot of noise inside this range while market is just coming back to create another structure. Let me give you a quick example right here. It happened right here on SU, right? It happened right here on SU USDT, right? Now if you look at this, on this swing, market created a swing, there's a swing high here, there's a swing low, of course filling a weekly gap here, then all of a sudden the market broke out, right, creating this clear break, right? There's a clear body break of structure so that we can have market moving, creating that continuation move to the upside. Since we bounced from this range, market was clearing an uptrend all the way here, we bounced from this range, we moved down, tapped into this imbalance, right, moved up, create a break of structure. So what we'll be expecting is that market should fall down and we'll look for buys. But at this particular point where market created this shift in break of structure on the daily time frame, from the weekly time frame you see it. Let's go to the weekly time frame, right? You see that there is clearly a shift, right? There's clearly a break of structure here. When market tapped into this imbalance, it went high and closed above, right? And closed above. So what you expect market to do on this particular time frame, right? Since market came here, tap, right, break of structure, created a low, a high, right? You'll be expecting markets to, this now becomes your swing low and this becomes your swing high, right? What do you expect market to do? Come into regions of discounts, right? Regions of discounts where market is likely to buy. And you can see on the weekly time frame here, this is the demand zone. This is the last green candle before market makes that move, and you'll be seeing clearly, right? You'll be seeing it clearly that, oh, this is the 50% region that market just tapped into, and there are other discount region from the 71% all the way to the 100% on this Fibonacci retracement, which is resting on this particular demand zone on the weekly time frame, right? Say you don't know that this is even a weekly time frame, you would know that, oh, this is the structure, right? This is the latest swing low and this is the swing high. We had a shift, but now the problem is you've had a shift on the weekly time frame, right? Market is looking bullish on this weekly time frame, right? Now of course, for markets on the weekly time frame to retrace back into discount regions, that will be lots of days, lots of candles on the 4 hours time frame. You see different candles. That's when you go to the daily time frame, right? Let's go back to the daily time frame so you understand. I want you guys to understand that structural confirmation I was talking about. What is wrong? Okay, good. Now let me mark out, let's go back to weekly, so I'll mark out that shift clearly. Let me use horizontal lines to get the swing low and the swing high. So we have the swing low here and the swing high right here. Alright, you can see there was a clearly closed body candle close, right? So this is the swing high and the swing low. Now let's go to the daily time frame. Now you know that, oh, market has created a swing high. Market is now retracing. Immediately market created the swing high. The following week closed bearishly. you had a shift to the downside. Close bearish means market wants to start retracing to either discount regions where you want to pick a buy from. But on the daily time frame, when you go to the daily time frame, right, you see the swing low, you see the swing high. Now you know that market has created on the weekly, there's a low, there's a high. But and you know that since market has created a swing low, a swing high, and that confirmation is there on the weekly time frame, if you draw your Fibonacci 2 from the swing high to the swing low, just follow me guys, you understand what I'm saying? From the swing highs to the swing low, you know that if you draw that Fibonacci, the 50% region is resting around this region. Let's put another line there. The 50% discount region is resting here. Okay, it's resting at this region. Now let's remove that Fibonacci. The 50% discount is resting here on the weekly time frame. But do you know, if you had not sketched out this like this on the weekly time frame, you would be trading buys even inside this particular range after market has created structural shift. You will be trading, you will now be looking for buys continuation if you are on smaller time frame, without knowing that, oh, what's happening, we are on a premium level on the weekly time frame. After that shift, what happened? This is the 4 hours time frame. Remember, this is our swing high and this is our discount region. Now what happened before market even created this swing high? Right, on the 4 hours, market tapped into this region, which was a beautiful buy continuation, right? Of course, then market went here and made the swing high, which also created this shift in structure here, clean break of structure. Right now, for this swing high to be created here, market has done what? A break of structure, a bullish break of structure on the weekly time frame, clean one, right? Then you saw market coming down aggressively to the downside, right? Market is moving down aggressively. Now body candle has closed here, break of structure on that time frame, right? What we'll be looking at for, if market has not created that shift, would want to catch buys. Now this is where the structural confirmation comes from. This is your previous low that has tapped into an imbalance and created a break of structure. Naturally, if all this move had not happened, what will you be looking out for? You'll be looking out for buy continuations, right? It means all you can see now is this low and this high, right? You'll be looking for buy continuations. Why? At this particular range, you would want markets, right? This will be your swing high and this will be your swing low, right? You want market to come into any discount regions here for you to what? Buy, which is the right thing to do. It's not wrong. Now what would you now do? You would maybe mark a particular point of interest here, right, and wait for market to react to that point of interest so you can catch a buy. Now what happens? You see market, right, selling all the way, tap this point of interest, and there's a reaction, right? If you had entered the trade of this region, something like this, of this region, right, you want to target higher regions because of course market is bullish, buying all the ways from this side. You caught this first buy all the way, you caught this first buy. Now you want to catch a continuation to the upside so that market can continue going bullish. What happened? You will take a buy and you will definitely hit this stop loss. Is your analysis wrong at this region? No. What is the market trying to do? Market is trying to shift internal structure so that it can go and create a swing low on the higher time frame structure. Is it an error for you to buy here? No, it is not, because this was the previous, on this time frame, this was low, this was the high, right? But if you go to the weekly time frame, on this particular high, right, on this particular high, market has created a break of structure, right? When market creates a break of structure, you don't know how high the break of structure wants to be now, because the market can do something like this, right? The market can still go higher, do something like this, and it's now a confirmed break of structure. So as long as you're concerned on the internal structure, you're still bullish and you want to catch those buy trades. But what happened? Immediately you now take that trade here, which is not a wrong trade. Market now decide to take out this particular structure. Now this is the lesson I want to teach. Now market took it out like this here. That was your pure eye. Now a smart trader would see this loss as a shift in structure. It means the only reason why market invalidated my stop loss, why market invalidated this trade, was because market wanted to shift structure. Right? Was because market wanted to shift structure. That's the only reason for invalidation. Right? But what other traders will do is they'll be still want to go to other blocks, be looking for other range to catch buys, instead for them to know that, oh, this was the previous low that gave birth to a high. All of a sudden the market has taken out this structure and closed below, and now it's going up. They'll say, oh, market is now liquidity. They don't know that a structure has shifted. If you now go to the higher time frame, say the daily time frame, you now look at this. This was where you hit stop loss. Now this was the low that gave birth to the high. What did market do? When market hits your stop loss for buy continuations, which was a valid buy, right? Market shifted structure and closed here, which is a typical move like this. When you have a high, a low, right? A low, market created a high, then all of a sudden market shifted structure. You were buying from here. You were taking buys from here in order to continue the bullish structure, right? Then all of a sudden there's a market structure shift, right? Now smart traders would see this shift on the daily time frame. At this particular region, they would not even have any need to catch buys because market has shifted structure. The next thing they know that, oh, if market has shifted structure, what will happen? There will be a pullback into premium regions for markets to continue the structure, to create another break of structure. Why? Because now on the weekly time frame, you have seen that, oh, there was actually a break. If market have shifted structure internally, it means market wants to actually retrace into regions on the weekly time frame now that I can catch buys. So at this point, if weekly structure has confirmed bullish, I will just need to follow internal structures. I don't need to now fight this shift in structure I've seen, and now be targeting and now be looking at every regions here to catch buys. What now happened? You can see immediately the market shifted this structure, right? It's a confirmation that, oh, market wants to actually sell, right? What happened? This was now the low. Let me take this out so you guys see it clearly. This was now the previous low. Look what happened. Market shifted, moved up, tapped into the supply zone and sold, just like what it did here. Moved up, tapped into a supply zone. This was the previous low, right? Market structure shift happened here, right? Market structure shift happened. Market pull up, tapped into the previous low and came back and created a break of structure. Look at what has happened here. Clean break of structure has happened. So if you had observed this shift on the daily time frame, all you need to do is to now wait for price to pull up, right? Even if you are catching any buys, say you saw this shift on this structure and you want to catch buys, right, from this demand when market shifted to this upside, and you want to catch continuation buys when market is retracing, you are not overlooking what this shift, right? You are going to pay attention to this supply zone. What most people will do, they'll be like, oh, because I've hit stop loss here, this was not the previous, it was liquidity sweep and market wants to buy from here, right? Because market now buy, they don't know that it's a shift and a retracement into supply zone for the sales to continue to the downside. Then what happened? All of a sudden market retraced back to the supply zone that caused that shift, and immediately market tapped into that supply zone. Market pulled down and created that break of structure, took out the previous low on this range, right? But you will see that a lot of traders now, if you have not recognized the shift and you do not pay attention to this supply zone, you will be looking for, on this range when market is dancing, you will be looking for buys. Like you can see the range is not a smooth drop, it's market dumping, moving up, right? You can see how market is moving, right? Let me take this out so you guys understand what I'm trying to say. So market will create the room for traps, Now immediately it pulled up, right? Immediately pulled up like this to tap the supply zone. Look at the way it's coming down. Now all these moves will create lots of buy traps for buyers, and it has actually took out this previous low and closed below, right? But because the sell did not come aggressively, right, it will create lots of buy traps. Now a lot of people will be buying at any demand zone, especially when the market has tapped into the supply zone and comes back into this range and come back into this previous low. A lot of traders would want to buy here. They don't know that at that point in time it will now be a trap. Let's go to the smaller time frame to look at that. Now this is the demand. This is the supply zone that market has tapped into, right? You now see that traders will be entering buys, looking for buys at any common demand, right? Market will tap into your buy, then all of a sudden market will sell, right? Look at this, it bought here, market moved up, create another demand zone and bought. Traders will come again, set their buy limit here, right? They will see they have seen a break of structure here, right? They'll set their buy limit, market will come, take them out, move, take them out, come again. You saw this demand, market will create another demand zone for buys, taking out. You can look at this demand that was now created also, right? Created here, very clean demand zone. All of a sudden market would retrace back. They'll be buying from here because while there's a demand zone here and market wants to buy, they'll say market wants to buy, then all of a sudden market taps into the demand zone, sells, take them out, because all this you haven't trading is inside premium zones, right? Trading inside premium zone on the weekly break of structure, right? Because the weekly has created a break of structure. So any buys you're now taking on this weekly structure above this region would be in premium zone. So the sellers will always be in charge, shifting the market till market gets to a region where buyers want to now buy. They'll now take control. Okay, so this is a very good example of a high time frame structural confirmation. Of a what? Higher time frame structural confirmation, so that you don't get trapped in lots of noise, demand and supply zone created on lower time frames. When higher time frame has showed you the structure, oh boy, I am not in my discount region. Wait for me to be in my discount region before you catch any buy. Because if this is the swing low on the weekly, this is the swing high. Let me delete this so we see the structure very well. Right? This will be discount regions. Any area below this region will be discounts. So if you're catching any buys here to long, buys above this region, they are now in the premium zone. And market has shown you this daily shift. So all these regions now will be market buying. It's now when market falls now into discount levels where buyers can take charge, you will now be looking to catch buy. And market will also give you a daily structural shift. That will be the confirmation. Except you're in a hurry to catch the trade. How do we know we're selling? Let me delete all this. Yeah, this is the last point I'll make before ending the video. How do we know we are selling? We know we're going to be selling all the way here when we saw the previous low that gave us a high, market took it out. The previous low that gave us a high, market took it out. How do we know that we are going to be buying? Any previous lower high that gave us a low that market takes out, it would be a confirmation that we are selling. Now market is creating, when it tapped into the supply zone here, you have something like this. On higher time frame, you have something like this, tap, shift, then a pull back to the supply zone. The market started creating something like this. It's actually selling, right? Now how do we know? Then it took out the previous low right here. How do you know that market wants to actually shift structure? When it gets, right, when it gets to a region of demand, what will happen? You see a shift. it means market will actually take out one of these on higher time frame. Now this will now happen on higher time frame because this is now a weekly range that market is retracing into, right? So you will now wait for a low on the daily time frame to be taken out. That will give you a confirmation. Now this will give you a higher time frame confirmation, because on any of this range you'll be seeing buy setup, but it will be might be a trap. So we don't need to catch the bottom, we need to enter after there has been higher time frame confirmation. So when there's now a shift from all these, look at the range now, low high, low high, low high, low high, there is a low, market is trying to create a high. When you now see a shift, this was the previous low, high, low, right? When you now see a shift above this region, market takes out this previous high, because this was the previous lower high that gave us a lower low, right? If market takes out this high, now on this range now, right, if you are trading SU on this range now, this range, you would see a lot of noise on lower time frame, a lot of noise. Why? Because the structure has not even given a clear narrative here. On this structure now, you see a lot of people catching buys to a higher time frame. No, where you would want to catch buys, good valued buys, and target higher regions, say coming back to create a movement upward, it's when this daily time frame now has now shift. This now gives you a confirmation. If the market now comes above this region, creates a daily close above this structure, right, you would now know there's a candle close above. This is now a market structure shift on this range, right? A daily confirmation that gives you good morals to wait for a pullback to catch a buy continuation. You will now be following that order flow pattern along the way, knowing fully well that the weekly retracement is now complete and market has actually on the weekly now done this move complete. Let me take this out, right? So it will now be that market has actually broke structure on the weekly, retraced completely, and is now going back to create another higher high. So it will now be a case of what, low, high, low, high, low, high. Okay, so you'll now be trading along, but instead of trading, so the importance of higher time frame structural confirmation is to avoid being trapped with internal noise, with internal structure noise, to avoid being trapped with internal structure noise, right? So for me now, if you now go to the 4 hours time frame, if this high is not taken out, where will now be a confirmation? This was the low that gave birth to high, and market created a low, right? All this now might be giving you so much noise when trading inside this particular range, right? Market might be creating so much traps, buy traps, sell traps on this particular range, but all you have here is swing low and swing high, right? For the structure to be bullish, completely bullish for me, I need a previous swing high to be taken out. When it's taken out, it means structure has shifted bullishly. I would now wait for a pullback to continue catching my buys. It will now tell me, oh, because the weekly time frame has created a break of structure, all these sells now that I caught was now the pullback. Now I can now start catching buys to create new highs, right? Confidently. If I can patiently wait for this confirmation before catching any buys of this trade, I would not be in so much noise, right? I would not be in so much noise or so much traps that market can set on this particular range when it's moving like this, right? So high time frame structural confirmation helps us to avoid those noise, right? It will help you in order for you not to take multiple trades. You not be taking, it will reduce stop losses, right? Multiple stop loss that you would have been getting, because the market could just be fluctuating on that particular range. Structures might not hold. You enter buy to take it out, you enter sell it to take it out. Why? Because it's currently in a range. On a higher time frame, it is just a range. It's not a swing low, it's not creating a swing high, it's just inside a structure, right? So I believe you guys must have understand a the little I've spoken about. So understand shift in structures on higher time frame, right? And in the next video, we'll be talking about how to also see this kind of confirmations on lower time frames in order before we enter our trade, and majorly using the 4 hours time frame, which is our analysis time frame, before we now go to lower time frame to look for that entries, right? So it is very, very important we do that. For example, let me just state this one because it's very important. For example, when market did a tap, now this is 4 hours time frame, assuming you did not go to higher time frame, right? This would have, let me take out these drawings. Now remember, let's go to the daily time frame. When market pulled up from here, this low, it went to this supply zone. Now let's mark this supply zone. You know that market has tapped into a higher time frame supply zone, and market already shifted structure. Say you did not see this. Let's assume you did not see this shift. Now someone that saw this shift knows that as market tapped into this region, right, market is coming to target this low. Market is coming to target this low, right? He knows all this price action has not happened. You saw this move, and market tapped into supply zone. Market is coming to tap this region because there's market structure shift already. Now on your 4 hours time frame, what you now be seeing is market coming here. You know this low is here, and market has been selling on this range, right? Then all of a sudden you now saw a kind of buy, and look at the buy. Now on 4 hours time frame, this buy actually took out this low, right? There was a low, a high, a low, a high. This is a market structure shift on this time frame. Now what do you call this? This is a shift. Market has shifted structure to the upside, right? What you'll be waiting for, you have a demand zone. You'll be waiting for, say, market to actually create a form of liquidity so that market can buy from this demand zone. Everything will be showing you buys, right? You'll be seeing maybe trend line shifts. Trend line has been taken out on this range, right? You'll be seeing trend line from here. You can see how the trend line is being taken out. Is this not 3 taps on the trend line? You can see a trend line taken out. You'll be like, oh, market has actually taken out the trend line. Market has shifted structure, right? So what you now be doing is you want to catch buys from this region. Because market has shifted structure, you want to catch buys so that market can actually buy from, say, this demand, right? Market can buy from this demand zone, and you want to target higher regions because market has actually taken out the what trend line. This is what you do, right? This is the natural thing you do at this region, which is not wrong, right? But now you can see that the traders who had entered this buy would be trapped. What happened? Market tapped into the demand, started ranging for a while, then boom, took it out, stop loss, closed below this previous target from this supply zone all the way. But on this, it has shown you market structure shift on 4 hours time frame, right? It has shown you market structure shift. It has shown you that market has shifted structure and market is going to the upside. There's trend line, current trend line break, and then all of a sudden market sells, took stop loss, did not even buy. Right? Now what happened? This demand zone was created on this daily time frame. This structural shift happened here on this daily time frame. Market tapped into this region on the daily time frame, and look at how market has been moving. This is the demand zone you are buying from, right? But look at the structure on the one out on the daily time frame. A high, a low, a high. Market created a low, a high again, a low. So if market is moving back, this was the low, this was the high. Market is only moving back for a retracement. But all of a sudden, because you saw the move, the previous high was this on the daily time frame. Let me bring that out structurally here. From here, we had this, a low, a high. Market created a low again on daily time frame, then a high, then a low, right? Then market pulled back into this low and sold back to close. Now on the daily time frame, the structure, there was no shift, right? There was no shift in all the higher lows were respected on this daily time frame. This low is intact, this high is intact, this high is intact. It created a new high. So the move you saw on 4 hours time frame was just a retracement move to respect the previous demand supply zone. If you had seen the move taking out this on the daily time frame, this is now a good shift. Then you can mark out any demand to buy from, right? But on the 4 hours time frame, it's looking as if market has taken out, has created a shift in structure, right? But on the daily time frame, this was the previous high that gave birth to this low. But on the 4 hours time frame, this is the low that gave birth, this is the high that gave birth to this. So you saw a market structure shift, right? But market was coming from a higher time frame demand zone. That's where it rejected from, creating lower highs and lower lows. But because you saw the shift just shifted on 4 hours, but on the daily time frame, it did not take out the previous daily high. So what market did was to move back into the supply zone created on the daily time frame here to sell. Then all of a sudden you saw the previous low that gave birth to this high has been taken out, and all the buyers here on this lower time frame got trapped. So these are some of the advantage that you would get using higher time frame confirmation. It will take time because you need to wait. So the problem people will get is, if they do not buy off this region, what if market wants to actually break this high? So if they not catch a buy now, it might be too late. It wouldn't be too late if you had waited for market to create this shift in structure here completely. If you had waited for market to create this shift in structure here completely, then you now know that a market structure shift has happened on a higher time frame. Then you can enter for a continuation. But as that did not happen, you saw how market violated that structure. So that will be all for today's video. We would continue on our next one, but this is something that would really help you. Structural confirmations now, without even talking about liquidity. Structural confirmations, it will help you if you know how to identify them on the chart, and it will tell you when to sit out. Once you don't see that confirmation, be like, guys, at this particular range, market might not be buying, market might want to be selling, structure has not shifted on higher time frame, so I'll just sit it out and wait and avoid all this noise, right? Because for example, now this market is moving to the previous high that was created here, right? We don't know if it has tapped into a higher time frame demand, if the structure is going to break in. For us to know that, there's a confirmed break of structure, we need to now see that, a previous high on the daily time frame has been taken out. If it has been taken out, we saw a shift clearly above this region with a body candle close. We now say, okay, we wait for pullback, right? And we now know that our direction is valid and correct, right? But apart from that, then would be trapped. Okay, so see you guys on the next one.